What's up, Dorsey? What's up? All right, man. All I have to say is that Bears suck. Bears definitely suck. Bears suck. They suck. Oh, okay. All right. Yeah, this thing is always doing finding a way to do something for some reason. All right. I'm talking to myself, Dorsey. I shorted the market this morning, and as you can see, price is still on its way up. Price is still moving higher. So I was mostly talking to myself about how much bears just suck. Because right now price is trading in heavy demand, or not heavy demand, but heavy supply, higher time frame supply at that. So the way that bulls are just eating through this level without no pullback, without anything. This is I would say this is the hardest part about being someone that trades the charts, being a technical analyst. I mean, you kind of depend on the charts doing what it's supposed to do. If you're in supply, you look for sell opportunities. If you're in demand, well, obviously you look for buy opportunities. But these bulls are just eating through higher time frame supply right now. It's actually crazy to see. So I was talking to Smith. He says, I think she goes up before now. Yeah, yeah. I mean, that's I mean, I don't think that yeah, Jack. I don't know if he was listening, but yeah, price is just eating through higher time frame supply, and that is completely throwing me off right now. And this is the part of trading that I don't necessarily like. The bears just suck. Bears suck. I think all bears became extinct during that 20 run up, and the only reason why we get pullbacks is because bulls take profit. Look at this, yo. Like, this is absolutely crazy. And the reason why I'm so against this is because I took a short this morning. And obviously I lost money, and it's crazy and it's mind-boggling. Yeah, look at that. Crazy. Eating right through supply. Crazy. Okay. I am looking at the higher time frame. I do see that the price is bullish, or the structure is bullish, but uh, if you look to the left, I mean, we've already traded over the area where our price dumped at. We traded over that area already. So so when stuff like this happens, you just kind of have to already be in the position. Because I mean, obviously, well, you can't say it's too high to buy in hindsight. If it continues to go up, you can be like, oh, it wasn't too high to buy. But yeah, this bullish run up is, yeah. So, and we're at that 17 level. This is the type of stuff that makes people revenge trade. Not necessarily revenge trade, but it's just so crazy. Hmm. is, how do you trust this? Dude, this is why, like, so recently I found myself on the bear side recently. And this is reminding me why I stay bullish even in bearish scenarios. This is just a reminder of that. The bears are definitely, so everybody that was in this level early April, if they did not take profits at the bottom, they are now either, well, obviously they're red because we've already traded above that structure high. We've traded above that structure high already. Or they got stopped out of this position. So we'll see. We'll see if this is the high that the bears are going to protect. We'll see. Because it does look like we're getting price to kind of sell off. And honestly, I kind of want to take this short. I know that I didn't necessarily plan for this, but kind of just want to take a short because I just want to take a short. I just want to short this. So I'm going to short it. I'm just going to short this, and we're going to have light risk. Man, I want to short this so bad, but honestly, I think if I short this, I'm just going to regret shorting it, honestly. What's up, Jonathan? So, feel like I'm going to regret shorting this, but I'm going to short it. I'm shorting this.
Order filled. I think a good stop out area would be 23, 23, 25. Well, 204. I mean, unless they bounce it right here. But yeah, Bears, yeah, you guys, yeah, obviously, Bears just enjoy getting clapped. They just enjoy it, apparently, because they're just non-existent in this market. They're not existent in this market. They show up when the Bears only show up when you don't want them to show up. We're in a bull run, and out of nowhere, people are shorting the hell out of this move. And they get their victories here and there, but it's disruptive more than anything else. Okay, that's fine. Bears gonna do what bears do. Now you get to an area of supply, all of a sudden there's no bears there. like what the hell? You get the supply and all the bears are gone, not existent. None of the bears want to protect their previous positions because this is futures. People, majority of traders in the futures market is long term. It's the point of futures. You're not necessarily day trading futures. You're trying to buy. So I mean, anything you're trying to buy is you're trying to hold on to a price just in case. As an example, if I buy a futures contract and it's $50, and in the future it's $100, I'm guaranteed that whatever commodity, whatever item that contract guarantees at that $50 price. So day trading futures is mostly technically gambling. It's not what it's designed for. So when you're in the futures market, you got to think that everybody that's not trading in a simulated account like we are, they're in it for the long term. So when we get to areas of previous resistance and support and stuff like that, it's supposed to mean something, at least in the futures market. But obviously, that's not the case. Obviously, because after we got that run up in 2020, bears has just gotten clapped. That's all they get is clapped, bent over and clapped. That's it. I'm gonna stick to my rules, Dorsey. I'm gonna stick to it. But that short just kind of like, you know what? I'm gonna take it because remember when we was talking about that move yesterday? And man, when me and Smith was talking about what move was it? It was this move right here. Uh, so when I came back to the charts and saw that if I actually got into this move right here, look at this run up. I was only looking for 190. It got all the way to what, two? It got to like two something, like 200 or something like that. Yeah, it got to 207, I believe. Yeah, it got to 207, and all I was looking for was 190. I was like, man, if I saw that earlier in the day, I probably would have not revenge trade, not in this account, but I would have bought an account to try to catch this move up. Because I was literally at the bottom, literally at the freaking bottom. Boy, I swear. Yeah, this is gonna be a work in progress because like I said, I don't necessarily trade like this, but like I said, this is something that I'm gonna have to start doing. And I think maybe the devil wanted me to. This was as soon as I was like, nah, we ain't take it. We didn't plan for it, so we ain't gonna take it. It's like, oh, you didn't plan for it, huh? It's like, well, since you didn't plan for it, let's just run this up after we get all this dreadful chop in the beginning of the session. But I'm gonna get stopped out at 23 if the Bulls are really serious and if they take it out. And I guess we'll just go back to it. So let's go back to the journal. Hmm. One time with another damn bull. All right, so notebook. So run through the day. I guess the day's the 7th. Okay, so the market is clearly bullish. It's super bullish right now. That is in brackets so we can see if the market is super bullish.
Okay. Mm. I'm gonna probably create a new template as well. I'm probably do this. Or actually, I think no, that's good enough. I'll be doing too much. All right, so right now the market is super bullish right now. Looking at the higher time frame, price is traded well above that 213 high. Honestly, I'm surprised that they actually got it over 200. 200 was supposed to be that line in the sand for bears to protect, but and that 213 level was supposed to be okay, maybe getting close to it, but the bulls traded above that already. We do actually have another swing high that it seemed that the bears have stalled price at, and this high is around 220ish. And you can see that the bears currently have come in at 220. So we may get a run to 22. Hopefully the bears just hold this off. Because I mean, we don't mind bulls being bulls, we get it. But when the market is just running up in one direction, in my opinion, the market is not fun to trade. It's not fun when it's just running in one direction. It's like do a pullback. Because everybody's just going to FOMO into this, and this is probably why we're running up this way. Because if you're a FOMO buyer, well, if it's too high to buy, the next thing you'll do is going to short this. Yeah. So right now they're holding off that 220 level. Yeah. 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 So it's like, so right now, obviously price is trending up. It's trending up on a higher time frame. It's trending up. And that's what makes this challenging. That's what makes this challenging. Obviously, we don't have to trade. We don't have to trade, but like I said, that just sounds cute. I mean, if we didn't have to trade, then shit, we wouldn't trade. So it's not the fact that we don't have to trade every day, is that we want to. And it's hard to overlook the fact that there's trading opportunities every day. So I would agree that if like in my situation right now, for some reason, I just want to short this market. I just want to short it. It's like, why is it not shorting? Like that's where my mindset at. And honestly, if I lose this trade, I should really sit back and actually that's what I will do. I will just take a step back and just let the market set itself up. Because this is just abnormal. Obviously, we're missing something in the market. I did see what the Fed said yesterday, and they didn't say anything that would suggest a bullish run like this. I can understand that the rate cut conversation is back on the table, but let's be real. He's not cutting no rates, and I'm pretty sure the banks understand that as well. So yeah, I mean, we can understand the bullish run up until a certain point. It shouldn't like a bullish run up shouldn't be this strong, but it is. So I guess that's what's really throwing me off right now. It's like what's driving this run up? Like what's driving it? Because as you can see, once we got that dip, once we took out that low, prices just run up. There is literally no pullback. There is no pullback. I mean, we got this small one, but it's just a straight move up. Crazy. So we'll see if this is going to be the drop. We'll see if this is going to be the drop because, like I said, we're in heavy supply.
Finally, Bears, like, Bears. But I don't think they're gonna make it that easy. They're not gonna make it that easy. They're not gonna make it easy. Yeah, the market does. Yeah, they said I must have a reason though, sure. So it must have a reason. It says agreeing when the market's pull. Get your agreement. He said a reason for the market to run up. Maybe I'm misunderstanding your question, Jonathan, but if you're asking me if the market has a reason to run up this way, honestly, I wouldn't know, honestly. It's just what's throwing me off is just the lack of price action. What the hell is holding this market up right now? This is a 5,000 tick chart. This would be considered a medium time frame. This is not a smaller time frame chart. This is be like closer to medium. It's small, but it's closer to a medium chart. And there's no price action. It's just going straight up. Why is this happening? Is this going? Yeah. Says for you to want to short it. Oh, because it's in supply. That's the reason why I wanted to short this. It's like price is in deep supply because we're in the same area where price had this big breakdown. You know how much power or how much orders it takes to push the market down like this? And this is our first time trading back in this area. This is why this is so abnormal because you usually don't get it. Usually, I mean, once we get into an area like this, I mean, if the bulls are maintaining control, we'll get a pullback. I mean, I don't expect a full blown reversal like this. I don't expect that. What I expect is for price to pull back into an area of previous demand and then we get a retest. That's what I'm expecting. The price is not doing that. And I understand that the market does what it wants. I understand the market can stay irrational, blah, blah, blah. I get it. But this type of price action is rare. So when it happens, it kind of throws me off personally. But we're getting this bullish move up, no pullback for no reason. And I think we got news at 9. I don't think it's any serious news. I think it's just news. I think it's a survey or something like that. It's like a survey, a tip survey. Cat. Some people call him Cash Money Kari, and some other people call him Crash Kari. And I guess on Wall Street Bets they call him Emotep or whatever that movie from the Mummy is. The name from the Mummies. So he speaks at 12 o'clock. He speaks at 10:30. I think he already spoke this morning, if I'm not mistaken. He spoke this morning, and I could have sworn there was a data release at 9 o'clock. Man, I hate that they do this. I hate that they do it. Okay. Yeah, so we have this real clear markets, this tip economic optimism. And I think this is basically another, what is it called? Consumer confidence. Because I feel like it's the same thing. Why this thing is Okay, do whatever then. Yeah, so I think this is similar to the consumer confidence. So basically what this measures is that it's the sentiment of nearly 1,000 adults nationwide and assess their economic prospects over the next 6 months. So this is basically consumer sentiment, basically. And I doubt that it will have any real effects over the market, honestly. I doubt it. But all right, let's see what happens. Actually, let's look at what SPY's doing because SPY is at, well, I guess everybody that bought puts yesterday, and this is something else. Everybody that bought puts yesterday, well, they bought 0 DTEs. Well, for right now, at least, they're not done. They're done for right now. And people are still buying puts. So, and this is what I'm talking about. Nobody is buying calls, and yet the market is just shooting up. There's more puts that are being bought than calls, and maybe people getting stopped out is what's really pushing this market up higher. But we're just in an area of heavy resistance. We're in heavy resistance in SPY as well. So I guess this might be the market makers trying to shake as much bears out as possible, because you can see that we're in heavy resistance in SPY. I mean, if the bulls just straight shoot up past this area of resistance and we're testing 520, almost all-time highs at 26, this market is definitely crazy. Definitely crazy. You would think that Powell came out overnight and say, yeah, we about to cut rates 5 times this year. We about to go back to 0 interest rates. That's how crazy these bulls are right now. You think he would have said that. Just Jack says NVIDIA is down. Yeah, I think what a lot of people is probably going to do with NVIDIA, I think they have their earnings next week on the 20, no, not next week. They have their earnings in the next 2 weeks on the 22nd. And if I'm an NVIDIA bull, yeah, look at that. Honestly, I might, huh, huh. Hmm. I'm gonna look at these later on today. I'm gonna look at this. I'm gonna look to see how much, if I can get, I'm gonna look at this. Okay, so yeah. All right, so they got their earnings on the 22nd. So, well, shit, never mind. They got NVIDIA covered. They got NVIDIA straight up covered. Never mind. Yeah, 760. So they got earnings on the 22nd. Let's look at this real quick. Nah, these are too expensive. These are too expensive to be gambling in. Okay. All right, so so this is the higher time frame as well, and you can kind of see the pattern. For right now, I think we're rotating lower. And this is why I'm saying this. I think the rug is being pulled right now. I think the rug is being pulled unless they come back right here, which, I mean, VWAP is right here. And then if they break it past VWAP, I mean, you got the 50, and this is possibly where the bulls might come back in and try to bounce this at 86. So we'll see. We'll see. But the reason why I said that they might be rotating down is because we got this sweep of this high right here, and then the bears took it down. The bulls failing to take it higher, and it looks like they're trying to rotate this down right now. Let me see if I can see it on a smaller time frame. Yeah. Yeah, so you can see the consolidation right here. They took it down. The bulls came back up. The bears is like, no, not today. They took that down. We got to break at the structure. They came back up, retested, and they broke down. So, I mean, they can try to bounce it here, but I think this might be it. I think this may be the rug pull. Yeah, this is looking like the rug pull, but we'll see. I'm keeping my eyes on this area right here. I'm keeping my eyes on this area. I actually might just keep this right here, actually, because I'm thinking that we can possibly, so I sold, so I can take profits right here. I can take profits here at the bottom at this 200 level. Okay, so I think bulls have one more run up before the bears take over. I do too. I do too, the waterman or the water trader. I do. I think that they might come back in at this. I mean, we'll see. When price gets here, I really want to see how the bears are going to react to this. I really want to see how they react. Because if they react the way I think they'll react, then we'll see possibly a bounce somewhere in this area, possibly at this 195 level. Yeah, possibly at this 195. Because this is where I see, price going back and forth right here. So I can definitely see them trying to bounce it, and we can possibly get a retest of this level, possibly that level. I mean, if the bears get held off right here, because for some reason that 212 level is where, I mean, I think I showed it to you guys already, but that 212 level is where we got that real breakdown lower at 212 or 213. And they for some reason, well, obviously resistance turned into support. So it seems like they're trying to use this area right here as an area of support to try to bounce this and try to take this higher. And you can see that right here, this is where the bears are trying to protect. They're trying to protect their positions right here at 212 or 218. Honestly, it would be nice if they just kind of would do this a little bit faster. All right, so let's look at the tilt. Let's see what everybody else is doing. Ah, damn it. All right, so 60% of right now, according to tilt, 60% of top step traders are short, both in the ES the ES and the Nasdaq, and only 40% is long. We normally fade the tilt. Normally, that's exactly what we do. But in this instance, yeah. I think that 96 level, I think that's where the Bulls will definitely come back in at 96, 95. Definitely. 96, 95. Hmm. Yeah, that's what I'm going to do. I'm not going to take partials. I'm going to get out of my whole position at like 97, 96. I'm going to take the whole thing off here. Just look at the dollar. It looks like it might drop. So look at the dollar. Oh yeah, I forgot I put on this trade. I forgot I put this trade on. All right, so look at the dollar. Oh, okay. The dollar is actually at support. Yeah, right now we're definitely at support. We definitely need to break it at low. I think this low right here is safe for the moment. And even if we do get a retest of this level, I'm thinking that the bulls will straight up will come right back here. We'll come back in right here and bounce it. Let's look at gold. I think it's what, AU or something, XU or something like that. XAU. I think it's XAU for gold. Yeah. Not financial advice, but yeah, this is a good long for gold. This is a good long. If I was a gold trader, I would take this. No, I would have already taken this. It's a good long for gold. I mean, we got prior resistance right here. I mean, I'm pretty sure they're going to at least try to retest this high right here. At least. Here's the last hurrah for bulls. Yeah, they're going to have to come back in. I mean, technically right now, crap. Technically, yeah. If the bulls want to be successful, they have to do something right here. Let's look at the NQ. Same thing with the NQ. I mean, we expect this type of stuff from the NQ. I mean, this is expected from the NQ. But when you get it on both the NQ and the ES, something is going on. I mean, NQ took out all her highs like it was nothing. She said she'll trade right in her supply areas and be like, "Oh yeah, I'm in supply," and then you'll get a massive rug pull just like this. She'll do it just to do it. All right, so I'm thinking that they retested that 200 level. They retested it. I'm not sure. Yeah, the highs was around 238, 238. So it did the same thing that ES did. It got to a previous high, 238, and that's where the bears are attempting to protect themselves. Why is that, water trader? Why did you switch from NQ to ES? All right, so the market is slowing down. I would agree. And I also agree with your first statement. I am a die-hard Nasdaq trader. I won't, I don't think there's ever going to be a point where I'm not trading the Nasdaq. However, I think a lot of people, I mean, it takes a special type of person to be not necessarily successful with the Nasdaq, but you just gotta be a special type of person. You just gotta be stubborn. I think that's the best way to how to explain it, especially intraday, because of those fake outs. And you have to be willing to accept possible loss because it's during when the price action is moving with the Nasdaq, it's man, either that shit gonna hit or it's not. And then once you get to that point and just like, well, hopefully it hits my target and not my stop, and it is what it is. With the ES, even though she's slow, there's not that much adrenaline. You're not in a fight or flight situation with her. It's boring, but you know what to expect. That's what makes her boring. You know what to expect from her. Her price action is definitely smoother. It's definitely smoother on the ES. The way I trade the Nasdaq is level to level. I will look at the structure, but if it didn't touch a specific level, then I'm not even it's levels that, or how do I say this? So with the NQ, I'm looking more at levels. With the ES, I'm looking more at structure. Because the Nasdaq is going to touch her levels. Like she don't care what the structures say, she's going to touch her levels. That's what she does. ES, on the other hand, because I guess it's has 500 companies that is weighted against, it kind of has to follow structure. And because it's a high liquid instrument compared to the Nasdaq. Both instruments are highly liquid, but obviously the ES is highly liquid. So speaking of being liquid, let's look at the volume. Okay. Okay. So let's look at the volume. So, I mean, we're trading with relatively decent volume. On the ES, we're over our 200K mark for the ES, but we're kind of still under trading on the Nasdaq, and we're kind of low volume on the micro ES, the Nasdaq, the E-mini Nasdaq, or the E-mini Nasdaq. And it seems like all the volume is in the micro Nasdaq and the E-mini S&P. So that's where the money is right now. No, I'm still a CL trader as well. It's just that recently I've kind of stopped trading CL after she did what she did to me. I took a break from CL for a while because that was just crazy. I mean, that was what she did was dirty. What she did was dirty, so I stopped trading her for a while. But when she calms down, once the geopolitical tension dies down, because that's really what's holding her back. And we're going into the summer months, so that's the best time to trade CL, in my opinion, is when we're trading her during the summer. I think you'll get the best price action during that time. So we'll see what happens when we get closer to the summertime. But I would never trade CL on stream. I mean, shit. She moves too slow for that. Or I wouldn't trade CL on stream. Yeah, that's crazy, man. Okay. Honestly, if this trades over this high, I mean, I should allow myself to get stopped out, but I'm just going to keep my stop where it is, honestly. I'm just going to keep it there. Yeah, I'm just going to keep it there at 23. Because we're in a bull market now, so yeah, we're in a bull market. Well, I mean, we've been in a bull market, but the bulls have just completely taken over at this point. So, hmm, I'm on 150Ks. But what's up, Joel? Um, yeah, I'm on 150Ks. Me personally, I wouldn't ever recommend a 50K account to anybody unless you're trading CL or gold or an instrument that, I mean, those instruments move, but and they move when they want to move. And they move based on what happens in the world around them. I would recommend trading a 50K with those. But other than that, if you're trading the ES, then the Nasdaq, I would highly recommend trading a 150K account. It gives you more room for error, especially on days like this where the price action, I mean, it's not confusing. I mean, price is trending up. There's nothing confusing about that. But it's just the lack of price action. That's for those that are just joining. That's what's confusing about this price action. I mean, we basically trended up on the ES damn near 100 and something points with no pullback. When does the ES ever do that? We literally trended up 100 points on the ES with no pullback. Damn. Knock on wood, but I haven't had, well, I guess, well, okay. Never mind. Never mind. I'm not gonna say that. Yeah, this is the make or break point right here. Either the bulls break through this level or the bears defend. This is the line in the sand. Yeah, me too. Right now, what I have what a 5 point stop on this. I mean, honestly, if it gets past 22, that's kind of, I mean, that, yeah, like I said, right now is the line, right here is the line in the sand right here. This is the line in the sand, literally at this 1820 level. But if it does trade past 22, I mean, we're going higher. That's actually probably where we're going to get a stop run. We're going to probably get a stop run around that 20, 21, 22 level. And that's why the Bears are trying to, like, they're trying to defend this level, because if they lose it, all their kids' college funds, it's all gone. It's going to be all gone. Yeah. As you can see, the Bears are defending this area. So they are defending it. We have Cash Kari, Cash Money Kari, Crash Kari, whoever you want to call him, or whoever, or whatever you want to call him. We do have him in an hour. Yes, I am bear. My bias is to the downside, but I do believe that people are going to try to de-risk before he said something, since he gave so many people PTSD the last time he spoke. Or the market makers can see that everybody is selling out of their positions, so they could be buying. But I'm looking for them to try to come back here and bounce price around this 196 level. That's where I'm looking for them to come in. If the Bears are successful. Look on Bookmap. Yeah, on Bookmap, it's almost even on both sides, and it makes sense why price is just floating in midair right now. It makes sense. You got people buying it. They got their limits set strong in this area. The Bears are doing the same. They got all their limits set here and at 220, going up to 25. So yeah, both sides are definitely in a battle right now. Whose stop is going to be used to push this market in either direction? That's going to be the question. Whose stop is going to be used? This Bear Cubs need to eat. Yeah. Yo, man, these Bear Cubs are starving, man. I mean, normally I'm a bull. I don't know if I said this to you guys, or maybe I was talking to Smith earlier today. Maybe it was just Smith. I was telling him this is why usually I stay bullish in bearish scenarios, because these bears are just not, they're not following through. The only reason why we get big moves down is due to news, but if there's no news, there's no major news, nobody's not saying nothing crazy. Even the data, the bulls are just using the data as an excuse to push price the way they want to push price, or push it to where they want to push it. And the only reason why we've gotten any big drop is these shocks in the market. And once the bulls get over that, it's back to business as usual. So that's why I mostly stay a bull, even in
when the market is trying to trend down, because I just know the bulls just do stuff like this. And you can see that. Look how hard this was for the bears to at least get this. This was hard for bears. I mean, they got to where they wanted to get to. Just for the bulls to take the elevator up, they took the stairs down. For the bulls to take the elevator up, they took the stairs down. The bulls took the elevator. I think this is the last bearish hoorah, just for the bulls to take the elevator up. So I mean, it's not beneficial to be a bear. But that does not take away the fact that anyway. So I wonder if they're going to try to protect that low at 210. I wonder if that's what they're doing. See if they're going to try to protect that low at 210. And this is the area where I definitely think if we do get past that 190 level, I think sometime this week we may touch this 150 level. And there is heavy demand here at 150. So if the bears are successful in pushing price down, I do expect bulls to come in around this area.
Connection lost.
Okay, I guess I lost connection with NinjaTrader. I don't think I did though. No, I'm still connected. I'm still connected. Okay. Okay, so so right now I'm debating if I should move my break even or my stop to break even +1. The reason why I'm debating that is if the bulls come back in, they're gonna possibly take out my stop. We have a pullback into a support area. It seems that VWAP is holding up right now, and the bears are having a hard time. We need a strong push. Yeah, that's what I'm gonna do. Because if the bulls come back up, I'm gonna get stopped out. Or yeah, I think it's gonna take price higher. I think the bulls are gonna take out this high if they come back up. So I'm gonna protect this position, and we're just gonna look for longs, I guess. The bears don't want it, even though we're in higher time frame resistance, and that's why I'm so adamant about being bearish for anybody that's just joined. Wouldn't that be? Wouldn't that be? So what was the strategy? So the 218 level was previous. You can see that they swept this high. So it was previously higher time frame supply. And this is why I got into this one right here. They got a sweep, and once I saw that they swept it and it was coming back down, I got in at 518. And this is where, and at this level, is where we got this massive dump right here. That's why I'm in this short at this level, is because of this. Now, I don't expect the bears to take it all the way back down here for a double bottom. I don't expect that. But what I do expect is for them to at least come in and defend this area and at least take price down. But however, they're using this this previous resistance as support here at 1213. They're using this area as support right now, the bulls. And so that's why I'm saying that if they bounce off this level again, I can possibly just get stopped out. So the bulls are going to have to push past this level, or not the bulls, the bears are going to have to push past this. And if they don't, the bulls got this. It says balance maybe it. So I do expect, like, so if the bears are successful here, I do expect them to bounce it at 196 in this area. I am expecting them to do that. Because we did bounce at 180. Was it 180? Yeah, so we bounced at 180 yesterday. And you can see this area right here of a little bit of price action. So I do expect for them to try to bounce it here. And then we also got the 21 EMA coming right back up underneath it. So, all right. So it looks like the bulls are going to possibly come back and stop me out on this, unfortunately. Unfortunately, but we're going to protect our capital. I mean, if you want to take this early before, if you're in this trade and you want to take this early, the way that the structure is looking, the bulls currently got it, but I'm going to keep my stop at break even +1. We'll just look for another trade. I wonder if they're going to use this to elevator this up. Come on, Bears. Come on. Come on. Push this down. Push it down. I mean, once we get a break of this level right here, it's kind of done. You can feel more comfortable in this position. Let me actually look at the NQ. Yeah, the NQ is at that same little spot. The NQ and the ES does trade very similarly. They do. Yeah, the Bulls got this. Yeah. Yeah, they got this. They got it. Mm. Okay. All right. Okay. Okay. So I guess we get another day of this, of indecisiveness in the market. We get another day of this. Yeah, volume's starting to come in. Hmm. Okay. Yeah, I'm gonna have to start. Gonna have to start trying to implement that somehow. Mhm. Both the NQ and the ES are both not moving. Hmm. Wow. Okay. Hmm. 490, huh? Okay. So May 22nd is Nvidia earnings. May 22nd is Nvidia. So I think if the market does that, Nvidia is going to sink the market. That's in 14 days. So May 30th. Either Nvidia pumps the market or dumps the market. Hmm. I don't think the market takes out all-time highs, though. I don't think it takes out all-time highs. Not before CPI, and definitely not before Nvidia. We have CPI next week on Wednesday. And I doubt that. I doubt that it'll be. I doubt it. Mm. So if it does it, it'll probably have to be that Friday on the 17th. But hmm, I'm gonna buy these. I'm gonna buy them. Well, that'll be a lot of decay. So May 20th, maybe like May 22nd, maybe May 22nd, May 24th. I mean, if it's the same price, no, that's double. May 21. Hmm, hmm, hmm. So they're making you sweat bullets. Yeah, like hmm. This is gonna be the deciding factor right here. This level right here. That 512 level, if the Bulls can't defend that, then this is going down to that 180, 190 level. But if they can, they're taking out that high. And so yeah, I can understand why it could be nerve-wracking. Probably just buy like what 3 of these, man. Yeah, I'll just do that. I'll do that. It's only $16. 14 days, $16. I think we can get a push down. Yeah, okay. Yeah, the way that the bulls are looking right here, especially on the NQ, and we're going to use the NQ as a forward indicator. NQ bounced off that area of support. It has bounced off its area of support. ES is on the other hand is trading in the tight range. And so basically price is battling between the 21 and the 50. Okay. So price is battling the 21 and the 50 versus the 200 EMA and VWAP. I wonder which side is going to win. But it's looking like it's might be going to get a break. That's what it's looking like. And if we can definitely get a break of VWAP, oh yeah, shit, we good. We good. Of course. I didn't expect nothing less. I expected nothing less than that. We all know that VWAP is basically God on the chart. We know this. So I expected that. This is not surprising to me. All right. We got Kashkari in less than 1 hour now. He's the Bears' last hope. He's the Bears' last hope. But if not, we're just going to take a step back from the charts, or at least I'm going to. And I'm just going to let the price action play out for the rest of the day. Good morning, Matt Moxie. Good morning, Alfred. So right now, y'all guys are just joining. I'm short. I guess I could go back over why I took the short. So I went short at a previous high or a previous area of support at 218. Once I saw that they swept the high and then we crashed right back down, I went in short. Obviously, the bulls came back in at 10. So I was up 8 points on this play, but it came back up. We got back to the 218 and we're dropping. So I think I may get stopped out of this position at break even +1. We're not going to let this thing go red on us. But if this breaks past this level, we're going up to the 20s. We're breaking this high. And then with the bullish structure right now, yeah.
Order filled.
Okay. So I'm out of that position, unfortunately. And that's going to mean that the bulls are going to possibly take out these highs. But I'm going to take a step back from the charts because obviously I'm not on the right side. I'm not on the right side of the market apparently. Yeah. uh, um,
Yeah, it was a good trade. Yeah. Hmm. Well, let's see. Let's see what the Bulls are going to be able to do. That would absolutely suck if they short this here right here. That would suck. That would just suck. Okay, so all right, all right. So it just didn't work out this time. I think I just missed opportunity. I think. Okay. All right, so let's see what they do at this 22 level, because if they run this stop, we're going to get a stop run higher. So let's see. Well, I'm going to get stopped out of this position. So this account is not necessarily an account that we're following. Is this an account that I kind of just do stuff on? I kind of use this account pre-market. And I'm going to get stopped out of this account. Possibly. Hopefully not. But this account, this is the account that we care about. But let's see. I want to see how they handle this level right here. I'm going to try another short here. And I'm going to show you why in a second. I just don't want to miss it.
Order filled.
I'll give this $500. Yeah. Okay. So I tried this short because this is the level where they got to defend this. I mean, they run this shit. This shit's going up higher. So the reason why I'm saying that this is the level that they possibly might come in is this right here. This area right here. I mean, if the Bulls get over this, we're like, dude, we're possibly retesting all-time highs. If the Bulls get over this level, we're going for all-time highs. We are going all-time highs if they get over this level. Actually, put that above the high right there. Which, in the current environment that we're in, that is the most craziest thing to say. Crazy. We dropped from this level because of a reason. We're not getting no rate cuts this year. Or the speculation is that we're not. If we get over this level, shit, the next level is 280. I mean, they might as well take this out if they keep it going. Actually. Mm-hmm. Maybe that's what the market is trying to do. Maybe that is what the market is trying to do. Okay. I'm actually not going to give this $800, actually. Hopefully I can just kind of break even. Yeah. We'll see.
Is 15, 12. Yo, congratulations on that, Jonathan. Yeah, that's pretty good for micros. And the Watermans, yeah, I can get really bold. Yeah, I think I'm just gonna need time to adjust to this. We got cash car in 30 minutes. I am kind of betting on that. We're in an area of resistance. We got cash car coming in. If they push it past this, then shit. I'm just gonna have to be a bull. And I'll just be a bull for the rest of my life until I guess the bears come out of extinction, because this, yeah, that's crazy. That's crazy. That's crazy. That is crazy. Hmm. Hmm. I guess resistance don't matter. Support don't matter. The market only goes up. That is crazy, man. That is crazy. That is crazy. I should have known. I should have known. I should have known. I should have known. Man, get the hell on out of here, dude. Get the hell on out of here, man. You got us bears going crazy. Obviously, the institutions are saying that they're about to short this shit. Man, yo, is Cash Card going to do the same damn thing again? Is he going to crash the market down to 511? Is that what he's going to do? Come on, Cash Card. We need you. Crash Card, we need you. We need you, Crash Card. We need you. The Bears, we need you. So these institutions think that the price is going to drop from 517. I mean, you got puts being bought as price continues to go up. I mean, the rug pull's coming. It's just crazy that we're just getting all this bullish momentum. Hmm. Yeah. Okay. So price is at 518. SPY is at 518. Obviously, it can keep going up, but if we get to that 520 level, there's definitely going to be stop runs, and we can possibly, like I said, if we push past this level, we're touching all-time highs. And just to think about that, regardless, I mean, we all know markets do whatever it wants, blah blah blah. We get that part, we get it. But it's like, what's the point of the all-time highs then? Like, what's the point? What's the point of even dropping the market? Just keep buying it. If you're just gonna, if nothing matters, just keep buying it. If nothing matters. Yeah, no problem. No problem. Yeah, man. Everybody should make money in this room, man.
Everybody should make money in this room. Because that's all that's why we play this game, to make money. That's why we play this game. All right. I mean, I guess right now it's just we feel that rug pull's coming. So I think what I should have actually is a let me see if they have it. You would think that it should without me having to. Yeah, I'm gonna have to probably come back in and do this. I'm probably have to come back in and do this. And so no, it's like okay, so right now I can feel that the rug pull is coming, but the market is shooting higher past resistance. There's extinct or non-existent. Supply areas and internally I feel conflicted because the market is being irrational. So Jonathan says that the tilt NQ is 50-50 more or less on X. So it's 50-50 right now. Yeah. I mean, honestly, yeah, we'll see. We'll see if Crash Car is going to crash this. If Crash Car don't do it, then nobody's not going to do it. It ain't going to happen because we have no news this week. I mean, if the market dumps off some crazy low volatile news, I would just laugh. I would just absolutely laugh at that. I would laugh. That'd be funny. All right, so
Okay. Okay, so there's obviously something going on. There's obviously something going on in a sense of I must be missing something. I must be missing something. Maybe it's the lack of non-volatile news this week. Maybe that's something that I have to actually take note on, something to add to the arsenal that if we have a light news week, well, I mean, there's really not, I mean, as I think about it, there's not really a reason for anybody to sell out of their position. As the pump continues from Powell. Powell didn't even say anything that would suggest that the market should even pump up like this, and that's what's crazy. I mean, we all knew that he wasn't going to raise rates, but we knew that he wasn't going to cut them either. So having a neutral stance on the market, I'm thinking that price would, it would range. And I can expect that. I can expect that, okay, we go to one level of resistance. We come back to an area of demand. If the bulls want to buy it there, we ping pong. Basically a big giant range as price rotates. But we haven't gotten that. We trended down. Well, this is after that, but we basically just trended up. And Powell didn't even say anything remotely that would suggest that. So I think that's what's mostly throwing me off. There's no reason for this, unless there is a reason that I'm missing. There's just no reason for this. Not for this one straight dildo move up. There is no reason for this. But I guess that's what the market wants right now. That's what the market wants. So on the higher time frame charts, it was bullish. So I'm not going to say that the charts didn't say that or suggest that price is not going to be capable of continuing to go up, because I did see it on the higher time frame chart. It just didn't make sense. It just did not make any sense. All right, let's see what Kashkari does to the market. Let's see. Let's see if the market makers finally shook out all the bulls that they wanted to, or not the bulls, the bears out of this position. And they're going to pull the rug on all the bulls. We'll see if this is going to be the catalyst to that. You know that's how they do. You know that's how they do, Alfred. You know that's how they do. Like, oh, Alfred think he's gonna get paid? Let's give him some hope. Let's give him some hope. 2 ticks, he ain't gonna close it. And then once he get 2 ticks away from his TP, run away about 2 points, 5 points. He ain't gonna close it. Just looking for a 260 take profit. Yeah, I mean, at that point, I mean, that shit basically done, man. That shit done. Yeah, you know how it is. So now I'm interested to see what they actually do here.
Because if they do drop this, this ain't gonna be no real drop for real. I mean, there's obviously an area of demand at 208. With all that consolidation around that area, they're gonna have to hold that up at 208. All right, we got Kashkari in about 11, 10 minutes. See what he does. It's it's a damn shame that like he's gonna be the savior for the Bears. The Bears are hoping for Crash Kari to show himself, to reveal himself. Crash Kari. But honestly, the way that this is looking, they're gonna probably. I mean, they get it to 230. I mean, that's yeah. If they get it up that high, I mean. I mean, unless they're trying to get it up to 48. Damn, are they trying to get it to 50? Is that what Price trying to race to? Is the 50? Watch, as soon as everybody turns, get comfortable being bulls, that's when the Bears are gonna show up like they did, like right here. The Bears never come out when you need them to. They only come out when you don't want them to. I mean, if they're trying to get it to 50, yeah, they might be trying to get it to 50. Yeah, I probably might take a step back away from the charts because obviously I'm just not seeing it right now. Or I'm not trusting it, is I guess what I should be saying. I'm just not trusting what I'm seeing because it doesn't make sense. Says let's go 350. You talking about on ES or are you talking about on NQ? Let's actually look at NQ. We haven't looked at her in a while. Yeah, okay, so I'm gonna probably get out of this position. I'm just gonna take the loss because this is obvious. It's obvious. The Bulls got hella control of this market right now. All the Bears are getting clapped. Actually, let me put that in my journal. I'll probably say that every day. Don't ever be a Bear ever again. Put some asterisks above this. Don't ever be a Bear ever again. This is why I left the Bulls or the Bear forms. This is why you leave it. That's why I left it. Because they suck. Okay, all right. As soon as yeah, okay. Okay, Bears, I see you. I see you, Bears. Y'all still suck though. Y'all still suck. Yeah, congratulations on that exit then. If you got out before that. Bears, y'all suck, man. Y'all enjoy getting clapped. Y'all suck. Y'all should have did this shit a while back. Okay. Hold on, are you trading ES or are you trading NQ, Alfred? You said it rejected. Okay. Yeah, I can see that.
I mean, even if you did that, you still got, man, Bears, y'all suck, yo. Man, Bears, y'all suck. Y'all just, yes, there's no follow through from Bears. Y'all suck. Okay. All right, man. Bears suck. All right. All right. I think I might just get out of this position. It's to the point now where I'm kind of over it. I'm kind of over it at this point. If we get a break below this low, I'm gonna move my stop to break even +1 again. Challenging week, but I mean, even through the adversity, we're definitely going to learn from this. So, like in the future, just on light news weeks, look for bear or bullish moves. And I'm thinking this is, I mean, it has to be a reason why we haven't gotten a pullback yet. And you already know what it is. If we got this big giant move up without a pullback, you know we're going to come down just as hard. We're going to crash just as hard as we flew up. Next week, we have CPI, and that would be the possible data release. Yeah, I'm just gonna make a note of that actually. I'm gonna make a note. I'm just gonna make a note on light news weeks. Let's see this. Light news weeks. Uh, hmm. Did I spell that wrong? Okay. All right, well, so let's see. Cash car in less than 30 seconds. I mean, if this man don't crash the market, if you're going to get a pump up, this will be my last trade for the day. This will be my last trade. Obviously, the bulls are just looking for any reason to buy this market up. And the crazy thing is, Crash Car is not even a voting member. So it's crazy that the market is so afraid of him now, or he had that much influence over the market when he's not even a voting member. He said, I need Smith to give me some balance. That's actually what that's what he's here for. During times like these. During times like these. So having a trading partner is so great. And that's why it sucks that you can't join the stream, because sometimes, like I said, I'm going to trade what works, and that's price action. But obviously, when the price action ain't working, or let me rephrase that. Price action is working. The charts are telling me that I should be a bull. I just don't trust it. So I guess I'm trading with my heart and not the chart. I just don't trust it. All right, Crash Car, let's see. But yeah, who knows, man. And then unfortunately, we may have to deal with this crap until all right, come on, Crash Car. Come on, we need you. We need you. We need you. The Bears, we need you. Look at him.
Expected. So that's really good news, to around a 3% inflation level.
Yeah, say inflation again.
Economic growth than we had anticipated. Those two things are a little bit puzzling. You would think if monetary policy is bringing inflation down, it would also be restraining economic growth, but we didn't see that. Now, in the first quarter of this year, conditions have changed a little bit. Inflation seems to have gone sideways, while economic growth has remained resilient. So it's led me to question, is monetary policy having as much downward pressure on demand as I would have otherwise expected? And one place I look at is I look at the housing market. The housing market has seen some evidence of slowdown. Mortgage rates have gone up a lot, but overall the housing market has also remained remarkably resilient, far more resilient than I would have guessed, having pushed mortgage rates, 30-year mortgage rates, up to around 7.5%. So when I look at this constellation of data, it makes me wonder, are there some dynamics of the reopening U.S. economy that has led the neutral interest rate to go up, at least in the short run, so that instead of putting 2 feet down on the brakes, perhaps monetary policy is only putting 1 foot down on the brakes, or maybe it's not putting very much downward pressure at all. And so I was raising questions and laying out some of the evidence that I'm looking at.
Obviously, as a policymaker, you have to come up with answers. I wonder what you think this means for the trajectory for interest rates. Is it possible we're going to have another rate hike? What do you think is warranted at this stage?
I think right now, I would say a few different scenarios that I'll lay out. I think the most likely scenario is where we are right now, which is just we stay put for an extended period of time until we get clarity on, is disinflation in fact continuing, or has it in fact stalled out? I don't think we know the answer to that, so I would say the most likely scenario is we sit here for an extended period of time. If
say more stuff like that, baby.
Inflation starts to tick back down, or we saw some weakening, marked weakening in the labor market, then that might lead us to cut back on interest rates. Or if we got convinced eventually that inflation is embedded or entrenched now at 3% and that we need to go higher, we would do that if we needed to. I think that's not my most likely scenario.
Oh, yeah, say some shit. Higher if we needed to, yeah.
That's interesting. And I guess what kind of signals are you looking for as you try and figure out if that third scenario is actually the case? What would make you concerned that inflation was embedded?
Well, one is, of course, just looking at the actual inflation data. I think one thing that's I think the committee is doing really well right now is we're all I think appropriately data dependent. We have different outlooks for where the economy may be going, but we're all very focused on what the actual inflation data is telling us. So first and foremost, what's happening to inflation? We have a dual mandate, of course, what's happening to the labor market. The jobs report on Friday was a little bit softer than expected, but not a soft not a soft job report. So continue to look at the labor side of the economy. One of the things I'm looking at is the housing market. I'm looking at new leases. Like, we know there's a mathematical relationship between new lease rates and then over the course of the next year or two, those roll over into actual inflation data, housing inflation data. Curiously, the new lease rates seem to have ticked up in the last month or two. That's a little bit concerning to me. I wonder why that is. Why would, if we're putting so much downward pressure on real estate, why are new lease rates ticking up right now? That's also a place that I'm focused on.
Okay, interesting. And then on the flip side, what kind of evidence do you need to see to make you feel confident that inflation's actually under control and you can go ahead and cut rates? Like, what is the bar there?
I think on the inflation side, we saw rapid disinflation in the second half of last year. Then, as I said, it went up in January and it kind of moved sideways in February and March. If we started to see some more inflation prints headed in the right direction, back down to our 3% target, we've had 3 bad inflation readings in a row. We shouldn't get faked out by one good inflation reading. I think for me, I would need to see multiple positive inflation readings suggesting that the disinflationary process is on track.
Multiple meaning 3, or?
It'll be the constellation of data. So it'll be more than 1, 2, 3 inflation prints, looking at the labor market, looking at housing as well.
Yeah, I got to try. I wonder, obviously as of the last summary of economic projections that you all released, the committee median was still expecting to make 3 interest rate cuts this year. Most Wall Street economists have sort of downplayed that at this stage. It seems unlikely that you'll have time. I wonder what your forecast is at this stage. Do you think those 3 cuts are possible? How many would you expect at this point?
I'll say in March, I jotted down 2 cuts for this year back in March.
Don't say shit like that.
I'm not sure where I'm going to end up in June. There's still some more data to come in between now and then. It's possible I would stay at 2. It's possible I'd go to 1 or even 0. We need to look at the constellation of data. I know this is not a satisfactory answer, but it's the honest answer that it's very hard for me. I know it wouldn't be more than the 2 I jotted down in March.
I better be scared.
It'd either be that or
I
less.
better be scared of this, man. This crash story, what are we talking about?
Election in November. If you guys cut interest rates in September or just on the cusp of that election, it seems likely that you will be in the headlines right around the time of the vote. Is that something that would in any way sort of factor into your decision making? Like, is that a consideration as you think about what comes next with rates?
If we allow that to affect our decision making, then in a sense we're allowing politics to drive what we're doing. And we're all absolutely committed to not let that happen. And one of the things that, you all pay close attention, most of you, to what the Fed is saying. We are being incredibly transparent about the data that we're looking at. So when you see the data, you ought to be able to figure out, hey, this either means they're going to be a little more dovish or a little bit more hawkish. So I think the data is going to guide us. And I think the data is also going to give everybody comfort that, hey, we see why they're making the decisions that they're making. It's not, I can tell you, it's not going to be based on politics or the election.
Yeah, interesting. I'm a reporter at the New York Times. I get a lot of reader email, and it's always interesting to see the trends that sort of evolve in my reader emails. And recently, a question I'm getting a lot from our readers is why, if inflation has come down below 3%, is the Fed so bent on getting it all the way to 2? Why do you need to hit that extra mile? Why not just say, this is fine, we've basically won. It was 9%, now it's 3%. This is a big improvement. And I always wonder how you would answer that question.
Sure. I mean, it is back to, and I know you're not going to be surprised by this, it is about our credibility of saying we committed to 2%, we met it, we can achieve that through our policy tools, and we are going to achieve it. And the thing is, if we stop short and we say 3% is good enough, then that undermines our credibility. And the next time that there's any type of an inflation spike, maybe you all and the markets and the public will think, well, maybe they're going to stop short again, and maybe it'll be 3.5, or maybe it'll be 4. And so we said 2%. We are committed to hitting 2%. We will hit 2%. And that's the best thing that we can do for the long-term competitiveness of the U.S. economy.
I want to circle back to your inflation forecast, because you kind of laid out a couple of different scenarios, but you didn't tell us exactly what your most base case inflation forecast is at this stage. What are you expecting is most likely at this point?
Right now, it looks like the economy's in a very good place. Economic momentum is maintaining. There's a lot of resilience. It seems like things are kind of at steady state. So if I had to pick a scenario today, it seems like we're going to kind of go sideways for a while. And under that scenario, that would lead me as a policymaker to say we ought to just sit with interest rates for longer than expected and allow them to bite. You know, one of the things that we hear is that maybe because so many Americans refinanced their mortgages when mortgage rates dropped during the pandemic, that there's a factor that monetary policy is not passing through to housing as quickly as it otherwise would because people are not feeling the bite of higher mortgage rates yet. If that's true, and I think there's some truth to that, then it may take longer for monetary policy to be fully felt by the housing market and by the economy more broadly. So that may guide us towards being more patient and seeing the effects of our policy actions.
That's interesting because if we're in some sort of steady state, and if it's the case that the transmission to the real economy is just a lot less, potent than it used to be, mortgage terms are 30 years. That seems like potentially a really long. Like, what changes just by leaving rates high or at this level for an extended period of time that makes you confident that would actually be enough to get inflation down?
Well, I think the last part is, that would be where I'm not sure how confident I would be at that point. But we would have to try. I mean, I think the bar for us raising is quite high, but it's not infinite. I mean, there's a limit when we'd say, okay, we need to do more. I think much more likely we would just sit here for longer than we expect or the public expects right now until we see what effect our monetary policy is having. If you look back at the Volcker era of raising interest rates quite dramatically, very quickly, it took a few years for mortgage rates to really start bending up in terms of the average rates that homeowners were paying on their mortgages. So even in the Volcker era, it took some time for the pass-through to be felt
We
to the
need
housing
Volcker
market.
back.
So I would want to look at what
I'm
are
just
people
playing.
actually paying. I mean, we do know, for example, credit card rates, if you have a balance, those are variable. So you're seeing some delinquencies rise in credit cards for subprime borrowers. You're seeing delinquencies rise in autos, also generally for subprime borrowers. So it's not as though monetary policy is not having an effect on the economy. It is. It's just not having as much an effect as quickly as I would have guessed.
Yeah, that's interesting. Do you think that weighing on sort of the very interest rate sensitive portion of the economy, which tends to be sort of the lower half of the income scale, the people who use credit card debt, the people who use auto debt, is that enough to get inflation down, or do you have to have a broader effect than that?
Ultimately, we believe, and I believe, monetary policy essentially affects the whole economy. Some sectors more quickly, some sectors longer. We can do what we need to do to get inflation down using monetary policy. I'm confident of that. The art is we want to do that while preserving a strong labor market. So far, we've made a lot of progress. We've had some help from the supply side, but we need to finish the job.
I actually wanted to ask about the supply side, because one thing that some economists will raise is monetary policy obviously affects demand. In this cycle, it's kind of a weird cycle. We are very housing supply constrained, and obviously monetary policy also affects housing supply. We've seen less building. It's ticked back up recently, but in general, in multifamily and single family, home construction's way down, which means less supply in the future. And, one of the arguments is this could lead to higher rents and higher inflation down the road. And I wonder how you think about that argument. Is it a concern? Are the side effects of monetary policy something you need to worry about at this point?
I think it's a timing issue. I think monetary policy and the monetary policy cycle that we're focused on is really the next 2 or 3 years to get the soft landing, get to our goals. I mean, it'll be hopefully be faster than that, but it's over an arc of 2 or 3 years. The supply side effects that you're referencing, I think, are much longer term effects. I mean, I think I'm in no way suggesting this, but if we had a high interest rate environment for an extended period of time, then that would have an effect. You would have capital being allocated to other sectors of the economy rather than to housing, and so that would lead to less housing supply. But I don't think that that's the same thing as the monetary policy timing and cycle that we're operating under.
Okay, interesting. When it comes to financial conditions, they are obviously a lot tighter than they were at the start of the hiking cycle, but they are considerably looser than they were last fall. And I wonder if that is something that worries you. Is it something you think is appropriate? How do you think about where financial conditions sit today?
No, it's a good question. One of the transmission mechanisms for monetary policy is, of course, through financial markets. And financial markets are so wired for exuberance. You know, I look at this. You had 3 negative inflation prints in a row, and markets started to take that on board and get a little bit concerned. And then you had 1 somewhat positive jobs report, and then there's back to the races again. Exuberance has returned. I mean, it's like that's a pretty strong disposition to exuberance in financial markets. So that does give me concern. And again, what are the financial markets telling us about the stance of monetary policy? If the financial markets are this exuberant, are they behaving in a manner consistent with monetary policy that is tamping down demand in the economy? That's a little bit of a head scratcher. And looking at financial markets is also a challenge for us, because financial markets are obviously paying attention to what we say and what we do. So in the essay that you referenced, I speculated that could it be that we and markets are misperceiving the neutral rate, that we and markets think the neutral rate is lower, and that's what's resulting in this inverted yield curve, but actually the neutral rate may be higher. Well, could the financial markets be paying attention to what we're saying about the neutral rate, and then we're influencing the market's judgment? And so, you know, for example, there's this thing called the blue chip survey of financial forecasters, one of many indicators that we look at. I'm always skeptical of the blue chip survey because it's basically a bunch of former Fed economists who are out working on Wall Street. And so we're basically talking to ourselves. And it's like, great, we look in the mirror and we like what we see. I mean, that shouldn't be that comforting. And so where are the independent pieces of data that can give us some guidance? And it's complicated.
Mm-hmm. I wonder, going back to the rates trajectory, you know, Chair Powell last week during his press conference after your FOMC meeting mentioned that one scenario in which you all could cut rates is if the labor market starts to just go to pieces unexpectedly. And it sounded as though that was sort of independent of what happened with inflation. He didn't specify, but he didn't, you know, have an inflation trajectory during that scenario. I wonder, A, do you think that's true? If inflation stays stable but the labor market falls apart, would that be a reasonable reason to cut? And B, how much of a sort of falling apart in the labor market would you need to see? Like what would the standard be there?
It's a good question, and I don't have a good answer for you. This, you know, we've talked about at the FOMC that we, of course, have our dual mandate, stable prices and maximum employment, and that if these 2 goals were in tension, that we would take a balanced approach. Now, we have not exactly define what that means. I think each of the 19 participants would have their own interpretation of what balanced means. Let me give you a very simple example for the sake of math. I'm not advocating this view, but it'll be clear. So we have a 2% inflation target. If inflation right now is running at about 3%, so we're missing our inflation target by 50%. If we think the maximum rate of unemployment in steady state is around 4%, a 50% miss would be 6%. So one model could be 3% inflation and 6% unemployment. Those 2 things are now equally missing. I'm not saying that's the right comparison, but we have not articulated to each other exactly how we would trade off. And I think that would really come down to the judgment of the various policymakers around the table, again, looking at the constellation of data.
Yeah, absolutely. Up to this point in this conversation, we've mostly focused on sort of the median outlook, what's the most likely outcome. I wonder, what do you see as the tail risks right now? It seems like there's a lot of uncertainty out in the world with commercial real estate, with geopolitics. Like, what is keeping you up at night?
A lot of things. One, first and foremost, is underlying inflation. You know, is underlying inflation actually, are we landing softly at 3% inflation? Okay, that's not good enough. That keeps me up at night. The other risk, by the way, is there all this pent-up impact of monetary policy that has yet to be felt by the economy, and this is going to hit, and would it hit quickly? That also keeps me up at night. Those are in conflict with each other, those 2. And then it's these, you know, the signals that we're getting. Are we misreading something in the economy? You know, for example, productivity. U.S. productivity growth looks quite strong right now. That's great. Why is it so strong? Productivity tends to be a residual of all of the other economic calculations that are made. A lot of times the residuals can be wrong, they can be revised. Is that going to be maintained? I mean, there are big fundamental questions in the economy right now, setting aside all the geopolitical risks that you just mentioned as well. So there's a lot of uncertainty that we're trying to navigate.
If the accumulated rate hikes are just sort of like hanging in the wings, waiting to clobber the economy, what is the mechanism by which that would happen?
Yeah, boy, that's a great one. I mean, I'm not seeing it. I talk to a lot of businesses, large and small, and I actually asked this question of some big businesses, and most businesses that I talk to feel quite confident. They don't have as much pricing power as they had a year or two ago, but underlying demand seems strong, and it's easier to find workers, but they're still having to compete to find workers. So I'm not seeing the evidence of that, but I also know, I can't rule it out. Or it could be some shock. It could be that, one of the things I learned in '08, having been running the TARP during the financial crisis, a lot of the risks, you don't exactly know where they are. So there's a lot of attention on commercial real estate risks. My guess is we don't actually appreciate where all the risks are buried. And my guess is that there are a lot of financial market participants who don't even realize they have some of these risks. And it's not just going to be US firms, it's going to be global firms as well. So there may be some surprises to come there when some of those risks materialize. And could that be a spark that catalyzes some broader response? I'm not sure.
I think with that, we are about out of time. Neil Kashkari, thank you so much for an interesting conversation.
Thank you, Gina. Thanks for having me. Go that way.
All right, guys. Give me a couple of more minutes. I just realized that the thing went off. So Crash Car ain't do shit as I expected him not to. All right. I mean, the Bulls have it. The Bulls have it. They price has definitely traded above that area of supply. Obviously the Bears wanted to get clapped. And that's maybe what they wanted. They wanted to get clapped, and they got clapped. So, but I'm not gonna. Well, actually, just I'm gonna just finish this meeting real quick, and I'm gonna come back and I'm gonna close out the stream. Just give me like 5, 10 minutes. All right, guys. All right. So I'm done for the day. I mean, even if they do sell it off here, at this point, I don't even care. I don't even care at this point because I think that's what they're trying to do. They're trying to get you to the point to where it's like they exhaust you mentally, and then that's when the run happens. I mean, all I can do is trade the price action. I mean, obviously the current price action should be more of a priority, but I mean, the price is just going to trade through resistance and just trade through it and trade through it. Well, I mean, what else can you do? So, what else can you do? But all right, guys, this is gonna be it for me. I made 64 bucks. I made 64 bucks. I made $64. That's so funny. That is so funny. I made $64. That's funny. Um, that's funny. Not bad. Yeah, you failed us. We counted on you. The Bears counted on you, Crash Car, and you failed us. You failed us this time. Okay. We counted on you when we needed Crash Car the most. He didn't even show up. He didn't even show up when we needed him the most. But all right, I'm just gonna put this in my journal for the day. Overall, I mean, we made $64, man. I mean, we was up. We was up, and that's the thing. It's not necessarily that we didn't even make money, because I think in the first drop, we was up about $9 to maybe $1,000. I think it was up about 8 points. I mean, we crashed all the way down to 210, I believe. So we was up 10 points or 8 points at one point on 3 contracts. So it's not like we didn't have an opportunity to make money. I thought that they was going to at least rotate this a little bit lower. And the price, I mean, we just didn't get that. But we did protect our position. I mean, just in case the Bears was not going to follow through, like we all know that they can't for some reason now. We protected our positions in both situations. And I think that's actually something that's at least growth for me on my part. Because in previous times, I would look at that shit and be like, nah, I'll just eat the drawdown. I know it's coming to take me out, or at least take out my break even. And I know I'm going to be sitting in drawdown. But eventually, I believe that it's going to work because I believe in the position. But me moving my stop to break even is that's growth. That is growth. So we're gonna say that. It's obvious growth. Moving stops to break even to protect capital. And that's what we always want to do. I do want to get out of that Wall Street bet mentality where with the options, either it's going to zero or we're gonna make some profits. Because I will do that at times. I will, but we're not gonna do that anymore. So I did take trades at previous supply, but it didn't work out this time. And I will take a step back and review the market for tomorrow because I'm not trading anymore today. Because today, that was kind of, yeah. I mean, these bulls obviously they won it, obviously. I don't want to come in. So my biggest concern right now, my biggest concern is that tomorrow or sometime this week, there will be a rug pull. Price is at an area
where if it continues to go, we might as well retest all-time highs. I mean, we're so close to it in comparison to where, I mean, you got to think in 1, 2, has it been like 2 weeks? In 2 weeks' time, we came back from a low of, I mean, at least on the ES. I mean, we came back from a low of 49.63, and that happened around April 19th. And here we are at May 6th, or not May 6th, May 7th. We about to retest all-time highs in such a small time frame. Now, obviously, if you're a bull, you're enjoying this, obviously. I mean, how could you not enjoy this being a bull? How could you not? But obviously, bears get no love. Bears don't get the love. Y'all get to feel pain. Y'all get to get clapped. That's all bears get to do nowadays for some reason. Just get bent over and clapped. That's it. I will show what I am looking at on the screen. All right, let me look at the higher time frame for both the ES and Q. So this is the 18,000 chart. So what I was looking at initially was, if you look to the left, I mean, obviously the bears took, or the bulls took this out, and the bears failed to defend this area. Now, my initial thoughts was that at least the bears was going to come in and make an attempt to protect themselves. But they did not do that. They didn't do that here. And that's why I was so adamant about being a bear, was because obviously we're in a previous area of support or supply. And when I took that short at 22, this is why I took it, because of this little line right here. You can see that this is an area where the bears came in. Obviously, we have this break of structure, but once we cross over that line again and the bulls failed to retest this level, this is where we got that initial drop. So I took these shorts here at these previous level of structure, looking for at least a pullback, because that's what I expected to happen. We didn't get that. Price obviously traded through these levels like it was nothing, like they weren't even here. So obviously the all-time highs is here at 533. I'm gonna really look at these charts and really try to gauge where the market is trying to go. Because if it's not going up, then that means it's going down. Hold on, guys, give me a second. Let me get our situation real quick. Come on, Blue. All right, I'm gonna be quick about this. So anyway, yeah, that'll be absolutely crazy. But anyway, I mean, we traded through this area. So, we traded through it. But it looks like they're trying to defend it now, which, I mean, at this point, I mean, you might as well. I mean, the next level of resistance is right around the corner, literally. It's 10 points. It's 10 points up the street. You might as well go for it. Why not? You're already here. Why not? And then this is going to be the next level right here around 248 on the ES and on the NQ. I mean, obviously it's levels, it's trading levels with the NQ and not structure. Oh yeah, I forgot. I don't have it on this for some reason. I don't know where price is. Let me look at that real quick. So price is at 255. So all-time highs don't really mean nothing for the NQ. We just trade her level to level. 255. So I mean, this area at 288. I mean, that's nice if they can get there. I mean, price is right here. Price is right here. I mean, we're at this area of resistance now. It's looking like the bears are trying to come in, but at this point, bears, you failed. You failed, bears. You failed. So, I mean, we're at this area. I mean, they could possibly try to push this and continue it higher. I mean, we're almost there. I mean, they might as well go to 288. And then if you get the 288, they might as well go to 300. And then 350 is going to be the next level. So it's, I mean, if they're going to push it higher, they might as well just push it higher. They might as well. So, I mean, these are the levels I'm looking at. 288 might be that next level of resistance where bears are, let me rephrase that because bears are extinct, for the bulls to take their profits at. Because that's the only way to sell this market off now, when the bulls take their profits. So that the bulls may take their profits here at 288. And if price does continue to go up higher, we can definitely see that 300, 350 level. Definitely on the ES or on the NQ. But yeah, it is, man. Yeah. But all right, guys, I'm gonna end it here. We're gonna come back tomorrow. I'm gonna just take a step back away from the charts. I'm gonna take a step back, and we'll just move forward from here. We wrote in our journal today. That was great. We broke even. +1. We made $64. That's great. So yeah, we'll just come back tomorrow. All right, guys. Peace out.